but the Federal Reserve has a challenge today. This is the first meeting since its November meeting in which it changed its shift from a 2% inflation focus to trying to restrain higher inflation. It's also the first meeting since Chairman Powell, in speaking to Congress, moved away from the term transitory inflation. The Fed has a very tight line to walk today. It needs to convince the markets that it's earnest in fighting inflation, but it can't confuse or disrupt the market so much with inflation concerns that it leads the economy or the markets down. So I think the Fed does two things today, potentially a third. The first thing that it does is it recommits to fighting inflation. The second thing that it does is it continues the taper and probably likely increases the bond taper by another $15 billion. If it does that for every meeting from now to the middle of the year, it will be done with bond tapering by June, which is when the Fed plots, the dot plots, as you indicated, say that rate hikes might increase. And then the third thing that could happen today is that the Fed changes the basic language in the communication to decrease the focus on a 2% inflation target and just say that 2% is a long-term target and that the Fed will use all the tools in its toolkit to fight both inflation and deflation going forward.
Greg, great analysis. What should our viewers do if they're in this market? I presume they're long, most of them are long. What should they be doing going into this Fed meeting?
I think the Fed meeting is important, but it's clearly not the only thing that's driving the market, Steve. The Omicron variant, as you indicated, has certainly been a focus in the market. Fed and other central bank activity are focuses of the market. There are over 60 central banks meeting this week. Supply chain issues are still forefront in the marketplace, particularly around the holidays. Not being discussed much internationally, but certainly a great under heightened focus in the U.S. is the U.S. midterm elections in 2022 and whether the Democrats will be able to maintain control. Early indications are that in the House and the Senate, they will not. But I think there are two other big things that have to be focused on. First, as you indicated, the markets are up almost 25% in the U.S. this year. There are year-end portfolio rebalancing taking place where investors are selling equities either to rebalance their portfolio if they're a tax-exempt investor or to harvest gains if they're taxable investors. And the reason they might want to harvest gains is the pending Build Back Better legislation, the $2.5 trillion piece of legislation that the Congress wants to try to get passed by the end of this year. If that passes, it raises tax rates on individuals and corporations next year. Thus, there is a big impetus to avoid that risk and to sell securities that have done well here at the end of November, or at the end of December.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.